Hey everyone, it is Evan here from The Trade Risk on Tuesday, December 10th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see major indices were all down slightly on the day here on Tuesday. We still have nice healthy 5-day change numbers here with major indices still up strongly since last Tuesday. And if we look here at some of the key simple moving averages, we are starting to falter a little bit in the Dow and Qs. Otherwise, things still look pretty good for the bull case. And if we scroll down and take a little bit closer look at sectors, it's semiconductors that is out in front leading right now, 3.31%, getting a nice bounce back after being on the bottom of the list and underperforming over recent weeks. So semiconductors followed by energy and financials, top three right there. On the downside, utilities, staples, and biotech. Biotech finally taking a little bit of a breather, still certainly in positive territory over the past 5 trading sessions. So if we look at major markets now, we got oil out in front, big lead here, 5% over the past 5 days. Next is emerging markets, and followed by that is China. On the downside, we have natural gas, we have silver, and we have long bonds, TLT, underperforming here and in the red. So if we jump into the charts now, take a look at what's going on here. This is a weekly picture of the S&P 500, and this is the cash settled market. So if we look close at the action here this week, of course, it's only Tuesday, but we are, first thing I guess to notice or to make mention of is that, we're not immediately following through and springboarding higher to new highs following last week's reversal. So again, last week, if we take a look at the action here, we had this wide range week where we came all the way down to 3,070 here in the S&P 500, traded lower by about 2.5–3% off of the highs, and then came roaring back and closing all the way up here into green territory, recovering all of the week's initial pullback. So we had that as the sort of backdrop coming into this week. And what we found is we did not get that immediate follow through. We really just kind of, fell and slid a little bit lower, retraced some of this pop here that we saw towards the end of the week, and continue to stay within this range. So one of the things we talked about in the Friday recap from last week was the fact that we do have some clear sort of lines in the sand to work against and to measure risk against going forward. And that still seems to be very much the case here. And when we think about where those lines are, we really have last week's lows. I think last week's action, because it was such a wide range week and we had a sort of an emotional week, so to speak, we can use those upper and lower bounds to sort of measure against going forward. So that gives us approximately the lows from last week, which was 3,070 on the downside. And on the upside, we basically have last week's highs of 3,150, or you could use the all-time highs from 2 weeks ago, up around 3,154. Don't want to be too precise with either of those marks, but just that general area here where you see these horizontal lines drawn are kind of the levels that I think we can pay attention to and start to, measure the dynamics and the character of this market against. So as it stands now, you can see we're just square here in the middle of that range, and perhaps that just basically says, let's maybe take a back seat here and let the market kind of figure out what it wants to do. Perhaps it's a retracement that's deeper into last week's range here. If we go down to a daily chart, we can see that we do have this Friday gap here that the market may, eventually come back down and refill and fill. It got close today. It made some progress into that gap, but it hasn't quite closed it. So you could use that as some initial profit target or initial target, not necessarily profit target, but initial target for the market to see if it comes down here, fills that gap, and then measure sort of how it reacts at that level if you're a very short-term active trader. Otherwise, again, I think you can just pay attention to those wider levels that we just mentioned. So that's kind of what's going on here in the market. It's been a quiet, sleepy week. We got a couple of events or potential catalysts on the horizon. We've of course got the I think the highly talked about and anticipated December 15th trade deadline with tariffs that could potentially escalate, and all of that fun continues to go on. But December 15th seems to be, at least loosely, some type of deadline that perhaps this market is looking at. And then we also have the Fed meeting coming up, which is also always a potential catalyst here for the market. But a couple of things that might reinforce that we have those catalysts on deck, or we have those events to at least think about or pay attention to on deck, and that might be reason alone for this market to kind of stay range bound here, stay choppy, kind of moving in this sideways range here in about this few percent range. And after that, or maybe if something material sparks from either of those events, we'll have the catalyst to break out and resolve this range. So a couple of things to think about there, but from a risk management perspective, technical perspective, not much has changed here this week. It's been pretty sleepy. We're sideways in the short term. Longer term, these trends, of course, are still very much up and to the right. We're trading just under all-time highs. So that is the S&P 500. If we go to the Russell 2000, you can see that this is holding up here. We do have Friday's gap, which did not get closed yet, so you could see down around 161 or so. But this is holding above the big breakout level here. Again, if we go to a weekly chart, take a look at where price is. It's hanging up here. This was the breakout zone around 160. You could go all the way up to here if you want. The April highs from earlier this year, so you could use that. But regardless, wherever you want to draw that precise top, we are still above the bulk of supply there and attempting to sort of break out and continue higher here. So Russell 2000, again, we've been saying it, as long as it holds above 160 or so, got to give this the benefit of the doubt here. It is encouraging that this is trying to lift higher here and help support and continue the market higher. If we go to the NASDAQ 100, we look at the action here, looks pretty similar to the S&P 500. We basically had the nice, rally late last week. We didn't get quite as high as the S&P 500 did. Notice we kind of put in a little more of a noticeable lower high here. We're starting to drift down, kind of filled that gap. Came close to almost filling it entirely today, but pretty much the same kind of meandering sideways here. A little bit of choppy action, and still waiting to see if this can actually make another attack at highs and start to break out. So that's the landscape. Remember, a couple of catalysts on deck. Got the Fed, got the trade discussions going on, so keep that in mind. And of course, we're quickly winding down to the end of the year and some holiday light trading. So let's jump into some other markets now. We'll go to TLT next. You can see here TLT on the week is up 0.22%. Had a pretty interesting wide range week last week. It got as high as 142. This basically looks exactly the inverse of the S&P 500, right? So if we looked at that S&P 500 candle, we got this nice drive lower and then a full reversal back to the upside. Well, it's basically the exact opposite here in TLT, but so far we are kind of popping up and not driving lower. So we're not following through lower, just like the S&P 500 didn't follow through higher. So it's pretty much wait and see here in TLT. It's very sideways in the short term, intermediate term, still sideways as well since August. If we go to metals next, we look at gold. You can see here more sideways action as well. This really hasn't gone anywhere for all of, really starting in the beginning of November. I guess second week in November really has just stalled out here. It's gone sideways around 136 to call it 138 or so. We're right in the middle of that range. No momentum, very choppy here. So really just pretty much a wait and see type of market. Silver did make the notable sort of new lows last week. Again, it wasn't new lows on the year. It wasn't new all-time lows or anything like that. It was just new lows in this digestion pattern, in this consolidation, this pullback pattern here that started in September. It topped out in September, and then it started pulling back and consolidating here. So it made new lows yet last week, hasn't quite followed through, hasn't made new lows this week. It's kind of going sideways here, MACD in negative territory, so once again, kind of sleeping, but certainly benefit of the doubt more to the sellers here in silver in the short to intermediate term. So those are metals. Let's look at energy next. USO is a good bright spot in this market right now. It had a strong week last week. It was up, let's see, about 5%, 6% last week. And you can see right now it's up about 0.5%. So it's holding up gains so far, not giving anything back right away, which is encouraging to see, kind of bumping up and holding above the $12 mark. So that is encouraging there in the short term for oil. Bulls still getting it done and keeping that trend lifted to the upside. What's the kind of the opposite case here, though, is natural gas, as this started to or continued to sort of break down and feel some pressure this week, especially if you go down to the daily chart. Yesterday on Monday, started the week off with a gap down of about 2.5–3% or so. Actually, it was more like 5.5% at the lows of yesterday. Of course, we didn't close at the lows of the session. We did rebound a little bit, attempted to rebound a bit today, but certainly when we zoom out here, we're starting to get, not starting, but continuing now to get more technically damaged here, as this is convincingly making new lows on the year here. So it danced around the prior lows from August last week around this $17.80 area. Had a little bit of a bounce, and then it started to give it back, and then it violently kind of broke down to new lows here. So lots of volume coming in. It's certainly a market in play, but it's making new lows here. So really, natural gas, had some attempts to sort of stabilize here, but it's quickly giving all of those, giving up its lifelines and credits pretty quickly here as it trades at new lows. It would really, in my book, need to get back above 18 or so. If it gets back above 18, does it on volume, does it with some authority here, maybe that would be an interesting event or potential at least short-term bottoming action there if that happens. But right now, not holding my breath. Trend is to the downside, making new lows on the year heading into year end. So that's it. That's the action here for the midweek. Pretty sleepy so far, but we'll keep an eye on things. Volume maybe a little bit lighter at this time of year, but we got those catalysts on deck, so we'll see what comes of them. For now, thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some trade ideas during the market session. Stay tuned.